Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Saturday. It's May the 12th, 2012. Typically, this video comes out on Friday, but as I posted on the social network on Facebook, Twitter, and so forth and so on, even on the website, I had to actually go to a graduation ceremony last night, so I wasn't able to actually do the video last night, so we're a day late, but it won't really matter because all I have to do is tell you everything that I know, looking at all these charts that we cover at PerfectStockAlert.com for the week ahead, so that you know that everything that I know. You'll also be able to see ahead of time which charts I'll be looking at, more interest than others. Okay, so let's get started looking at Australia's markets. And the very first thing that I see here is we are in an obvious falling apart here in the charts. You have a high point here and a higher high here, a low point here and a lower low here. When you get that, these are known as conflicting signals because you have higher highs, which would indicate uptrend, but you have lower lows, which would indicate a downtrend. So the actual direction, sideways. That's what you get whenever you have that scenario. Right now, we have not actually found any major support here. We've been 1, 2, 3 times below the 50-day moving average. That's signaling a breakdown of an uptrend. So this is what I expect to happen. I expect we will continue to move lower. However, I don't want to get short right now. You'll notice that we have on the Ultimate Oscillator here fallen down below the 30 line pretty substantially, and you don't want to be short in there because you typically get a bounce in those areas here, even when you get close to it here. So that's not where I want to be shorting. I want to wait for that bounce opportunity and then try to go short. And I won't go short just the first time you have it to upside. I want to wait till we get an upside that begins to fail. We get a nice little rally. Hang on a minute. Okay, we get a nice little rally like this, and then you get a shooting star formation. 1, 2. Those are sell signals. That's what I want to look for. When I get that, then I'll start going short on this one. I expect you will have a series of situations where you're starting to break the uptrend. So what's going to happen is a bounce at some point will occur. That bounce, it could happen start next week. We could start to see a move to the upside and then start to fail and then roll over. I would look for an opportunity to go short in this particular market at that time. One other item that indicates a bounce is likely, and it's coming, would be the fact that you look at the Ultimate Oscillator low point here. You'll notice you got a lower low here, so you're actually trending down right there. But the corresponding time frames for the chart, you can see that we have low points and then lower low here, so you can actually trending up. So this is conflicting signals, and what you can learn from that whenever you see that is called a bullish setup, basically looking for a bounce to the upside. It doesn't mean you're going to be a bull market or anything of that nature, but just look for a bounce. Like I said, it could happen next week, but you could also push down a little bit lower before you get to see a bounce. So right now, I just leaving this chart alone. The Dow Jones Industrial Average, this one we talked about in pretty good detail last week. Obviously, I've been wanting to get short this. We've got this major move to the downside here, but again, it kicked us out. We got stopped out before she actually rolled over, so we didn't get to take advantage of this particular average. However, the next a couple days ago, we saw this move to the upside here. We told you we were looking for a bounce. Sooner or later it was going to happen because you had what was it, 6 or 7 consecutive days to the downside. That's above average. You're going to get a bounce. When situations like that happen, it's like stretching out a rubber band. You go too far, you're going to get that whiplash in the other direction. So that happened a couple days ago. We saw that move to the upside. But then you'll notice it was unable to actually make any sustainable move higher. It just sold back off. So that kind of gives some concern. We're talking about this is a tricky market because what could actually be happening right now is you may have just seen the end of your rally to the upside. And then that's a really difficult call to make, but I decided it was worth making it in this particular situation. So I told you that if the following day gave us a lower low, lower than this point here, I would be willing to start shorting again with a stop set right here. That has held thus far and it's worked out, so we are short and maintaining that position until we get either stopped out or we start moving lower, and I'll start advancing the stop to the downside. Remember, these charts are always kept on our free website at PerfectStockAlert.com. They're updated every single night, so that anytime I advance a stop loss limit or see a new opportunity, I mark them on the chart so you can check them out anytime you like. Right now, I would stay short. I don't see any reason for this market to be being bought up. You've got major resistance up here. You can come up here and hit it once, sold off, hit it again, sold off, hit it again, sold off. Came up there again, and we're unable to break through again, and when we sold off again. There's major resistance at this level, so I don't want to be a buyer hoping for a breakout of this. We obviously can't do that here. We've tried from this level before up here and failed. Now the idea that you're going to, from this point here, run up here and break through doesn't make a lot of sense because you've already tried that, and it didn't work. The French CAC 40 index, this one is obviously in a downtrend. Note the high points, moving on down to the low points. We just continue this pattern, lower lows, lower highs. we're not going anywhere but down here, so I want to be looking for short opportunities. We got short here, saw this sell signal right there. We took that opportunity, and you can advance your stop that was up here way down here. You can advance it to 1 cent above the most recent candlestick's high. The situation here, though, because you're looking at many different markets showing potential for a bounce to the upside, it's a counter trend bounce, not anything that you should get all bullish about. But because you're looking at that in so many different markets, you're seeing hammer candlestick formations, which are also another way of signaling look for a bounce. There's a high likelihood that you could get stopped out on a short position. That's fine. We just want to look for another opportunity to get short again. We don't want to get left behind in a major sell-off to the downside, right? The German DAX composite, we've actually already been stopped out of this one. We talked about with the French market, we got short here, followed our stop lower as we continue to go. Some of you guys may have actually advanced the stop all the way up to this point here and been stopped out a little bit earlier. Doesn't matter regardless of what you do. Now at this point, this is just a counter trend move here, and you want to look for it to peak out. At some point, she is going to give you a shooting star formation, some kind of a sell signal. In this case back here, we saw a bearish divergent, a bearish engulfing signal here. That was our sell signal in that case. So whenever we get that sell signal, I will be looking to go short again. We are in a downtrend, and therefore I want to be working with that trend, meaning that I'm going to be looking to take a short opportunity, and that's typically going to be found in one of two places, actually three places. Either number one, you're going to find it at the resistance point of the 50-day moving average, like you did back here, or actually this is closer to the middle Bollinger Band line. And in downtrend, oftentimes you will find resistance at the middle Bollinger Band line. So a little bit more to the upside, you could find resistance here, and then finally the last place you're going to find it is at that upper Bollinger Band line. So be watching those three areas of resistance, and whenever you hit one of them, analyze the actual candlestick formation. If you get something like this, a nice shooting star formation, then I'll be looking to get short. One more item I'd like to note about this chart, you may see it on others out there. You're going to be seeing a lot of hammer candlestick formations out there, and so people are going to be looking at that saying, well, isn't that a bullish move? Isn't that something you often look for? It is something to look for a bounce, but it doesn't necessarily mean that it's a bottom bounce. What it means is you look for a bounce. Here's a hammer, and you had a nice bounce off of that, but you'll notice it wasn't now the beginning of a new uptrend. It was just a counter trend bounce and overall trend lower. The main thing here is that your overall pattern on this chart is obviously down. You've got high points trending lower, low points trending lower, and actually, if you look at this pattern that you have right here, you can see this. You have a rising, not rising, but a widening wedge pattern here. That's a bearish formation. It's not a bullish one. It does show some increase in volatility there. You can look for a nice move to the upside here, and then be looking to get short on it. This is something that you learn to spot over time. It's just finding different patterns you can find in the charts that tell you which direction the overall market is heading, and this one is bearish. If you go to our free website at perfectstockalert.com, you'll find many different tutorial videos there teaching all these different patterns and trading methods that we know already in video format for you. Okay. Gold has broken from the sideways moving activity we talked about before. You're just moving sideways in gold for a while, and we told you it was going lower, and it did. And it's been several different times when back there in this time period, as well as on this day, different market websites and news sources have been coming out trying to get people bullish behind gold, and it's just not happening. It's just falling apart. When you look at gold and you look at silver and when you look at oil and you see them breaking down and going lower, that's not a good sign. Go back in 2008 and you look up and see what happened with gold when the market started to fall apart. Gold wasn't a safe haven in the sense of, hey, if stocks are going to sell off substantially, you can buy gold and be safe. It doesn't actually work that way. So whenever you looking out there and you see these people telling you to go buy gold to be safe, it's really not safe from the market standpoint. So you keep in mind that you had to always follow the charts. Whenever the charts are telling you that she's in a downtrend or she's moving sideways, something like that, just leave it alone. That's what we've been doing for a while now. We're not short gold. We're not long it either. The Hong Kong Hang Seng Index. This one actually tried to reverse the downtrend. We had a real nice move going here. Obviously, lower series of lows, lower series of highs. Very clear what was going on here. Then we break out to the upside. We're taking out the high points here. Get a little pullback, giving ourselves a series of higher lows and higher highs. We start to reverse this to an uptrend. That was nice and everything we talked about. I can't deny that has just changed. So you want to look at the next pullback and see, does it actually maintain the support? Does it give me the right signals? You get a pullback here, a substantial gap down, starts to move lower, and then she takes out the slow point. That just debunks the entire thing. So they reversed the move from a downtrend that you had back here to an uptrend, and then they just broke it down again. So now, best case scenario, you can look at this chart and say we have higher highs and lower lows. That means sideways moving activity. So when you've got this pattern right there, your direction is sideways, but you'll notice again you're basically looking at a widening wedge pattern, and this is not something that's bullish to the upside. It's something that tells you that the market's falling apart, your supports are falling apart. We have had 7 consecutive days to the downside on the Hong Kong Hang Seng Index, so any move that I have to the upside, I would expect it to be nothing more than the rubber band effect, that counter trend bounce to in the other direction. So whenever you see that, be looking for a short opportunity. The India Bombay Stock Exchange, we got short this one when she broke the support line closing below the channel. You can see that we were just moving sideways at this range here. We talked about this, I believe it was last week. We just kept moving sideways here. And for a while, I tried to short it. It was back here, I tried it, and here we tried to expect it to break down, but she didn't do it. She kept moving sideways. So we just left it alone, waiting for this support line to get taken out, closing below that. This is like a breakout trading opportunity. It's just not a breakout to the upside, it's a breakout to the downside. So you take advantage of that opportunity here. We advanced the stops, we're going long, and now our stop is here. We'll continue to maintain a short position here, but if we get stopped out at some point on a reversal bounce, that's fine too. But right now, I see this is continuing to move lower. We don't have any hammer candlestick formations here. This is not a real bottom. Looking at the EWJ, or Japan iShares, we have a major sell-off here. Has broken the support that we talked about before. I told you that the support that we're seeing in overall markets is going to be breaking down. We've seen that happen with gold. We've seen it happen with silver. We've seen it happen with EWJ. We've seen it happen with oil. All these charts are indicating the same thing. Major support is breaking down. These prices, these averages are going lower. How low we're going to go before we actually get a bounce it's going to find some support and give us an uptrend, at this time we don't know, because a lot of this is being driven by news out of Europe. So whenever you hear the news coming out on Spain, things like that, that's what's actually driving these markets lower. That can flare up and get really nasty really quick, and so I'm not going to dare give you a low point that I expect we're going to reverse back to in the other direction. For now, keep an eye on the charts, but trade with the trend. That's the most important. If you get a nice sized bounce, and I don't mean like a little one-day thing, but if you get a nice little bounce, counter trend move, back up to the middle Bollinger Band line or something of that nature, and then she starts to peak out again. Well, in this case here, I would love that if you get a move to the middle the middle Bollinger Band line, because that's about the level that you had support with back here. When you have support that's broken down, typically support turns into resistance, so that means that would be a perfect place to be finding some sell pressure there and be able to get short at that point and start following her lower. So if we get a bounce, that's what I'd be looking for. Looking at the FTSE, or the London Financial Times Index, you can see that the counter trend bounce has actually already begun here. You've had a few days to the downside, nice move here, taking out the low point that you had before, and you get a hammer formation here, and then again here, and then again here. You get 3 back to back right now. This is, if you were in a bullish uptrend, this wouldn't happen. You wouldn't have 3 hammer candlestick formations, because bulls would already jump on it. But right now, everybody's all cautious and wondering why we keep falling apart. So they may take it on the long side here. If you are a buyer here, you want to set your stop off the low of the current candlestick formation right there. Continue to advance those stops as you move higher. But I wouldn't look for a big move to the upside. In fact, I consider this to be a counter trend bounce. Your overall trend is still lower. I'm looking for resistance at the key levels, either the 50-day moving average, the middle Bollinger Band line, something of that nature, or some previous support, which is now going to be acting as resistance. So be looking for another short opportunity on this one. Like I said, if we get a bounce, start moving higher next week when we get up here in this level a couple days to the upside, and we start to show the same signs that we've seen before, the shooting star formation here, here, here. We get any of these signals, then I will obviously start shorting again, just like I did back here. The NASDAQ did basically what happened on the Dow Jones on a day prior. Looking at the NASDAQ, you can see that you had an attempted reversal here, a counter trend bounce. You had to sell off here, took out the low point here, made a newer low. So that's a very good sign there for bears. Then she starts to move in the other direction. You start to get a higher series of highs right here, and at that point you would have been stopped out of this previous short position. Actually, I think it was on this day. So you get stopped out here, but then you want to be looking for another short opportunity, and this one did, like I said, with the same as the Dow Jones Industrial Average did, where she starts to move higher, and then she sells off again, showing that bears are still very strong here. They're not just going to give this away. And whenever you see that situation, there is a case. There's a rare case where the situation has peaked out already. When you're looking for that counter trend bounce, you could, in this case, argue that has already happened. You've already peaked out in just a single day's move to the upside. It's rare, but it does happen, like I showed you on the Dow Jones. So what I would do here is have an if or then scenario. If the following day gives us a lower low, we take out this low point right here on this candlestick formation, and we don't make a new high, we just start to roll over here, then I would take that as confirmation. I'd get short, and I keep my stop right here. Real tight stop, but expect this market to keep moving lower. I expect this will be taken out in no time soon. For those who may be wondering, if we do get stopped out, and we say that perhaps this sell-off we saw here was only a Friday situation, people didn't want to hold stock over Friday, so what can happen is you get a false signal, and then the following Monday you just take off to the upside and just keep moving higher. That's fine. Then you simply wouldn't take this trade because you didn't get confirmation. She keeps moving higher. Let it continue to do that. At some point she will rally to a peak, and probably you're going to find that at the 50-day moving average right in this range here. And then when you get that, if you get a nice candlestick formation confirming that sell signal situation like that, then you can get short and continue to follow this guy lower. She is in a clearly defined downtrend. The XOI oil index chart, this one we basically did the same thing that the Dow Jones Industrial Average did. Gave us the counter trend move to the upside after 6 consecutive days to the downside. We had those 6 days selling off here, making lower lows. Then we get 1 day to the upside, which would have stopped out any short positions, and then she's rolling back over again. So I think, again, that we are seeing a situation where the sell pressure is very strong. Your counter trend bounces to the upside are going to be very small, and this could be a great opportunity to get short at this point if you continue to just move lower here. This would be really difficult for people to catch because a lot of people are going to say, okay, I'm trying to play the counter trend move, expecting something like this, and then they get faked into it when it reverses, and they say, okay, go buy, and then it just immediately begins to roll over and go lower again. That shows, like I said, a great deal of sell pressure in this market and very little desire for any kind of a bullish position. That should be concerning to anybody who is long. I mean, at this point, it's been several weeks we've been getting short on different situations, so we're obviously not bullish in any way, shape, or form, and I wouldn't try to be. As we said before, when people buy stock, when people sell stock, they inevitably buy dollars. So whenever you see that situation going on, people are dumping stock, you should see the price of the dollar begin to rally, much like that. So when you have a situation like this, you had 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days to the upside. Remember the rubber band scenario. You do that and you're getting above average conditions. Eventually, no market moves straight up or straight down. Eventually, you're going to get a counter trend move. You're going to get another pullback, something of that nature. In this case, you can see that we had a 22.23 was the high back here. We're seeing 22.24 now. We're up higher than we were before. That tells me one thing. I want to be looking for this guy as reversal move to the upside here in the dollar. So any pullback I get, I don't want to be shorting it. I want to be looking for a buy opportunity. That's the way I would trade that. But I'm doing that, and I'm looking at this chart, and I'm getting confirmation on everything I've just told you about the major averages out there. They're selling off. That's why you're seeing a rally in the dollar. They're getting into a downtrend. That's why you're finding an uptrend forming here in the dollar. So this is obviously something that's confirming and telling you which way you want to be trading this on the long side when you get a pullback. The Russell 2000 Small Cap Index, this has been a great trade for us, made a lot of money on it, finally got stopped out a couple of days ago, and then we just get the same signal we've seen on a couple of other charts. Here it is. We get another sell signal right there, but it's on that support line. What do I think about this? It doesn't surprise me if we break down right here. There's just not a lot of desire to own stocks right now, and I don't blame anybody for that. If you look at, we've talked about this before, so she rallies to resistance, she fails. She rallies to resistance, she goes flat for a little bit, then she tries to break out. It was a failed breakout attempt. She fails again here, and then falls apart. And she can do that same level again. We get another wicked sell signal right here. Same resistance line has just been the problem throughout this entire thing. Why would anybody try to buy here hoping for a breakout? They're not going to happen. So when you're buying here, you know there's no upside potential here, no substantial upside potential. So to see her give you reversal signals here, and then only give you 2 days to the upside before she reverses back to the downside makes a lot of sense to me, because everybody knows there's no way you're going through this line. So in that reality, you just start selling and look for an opportunity to make money on the downside. Also, you have the reality of this is a head and shoulders formation. Let me clear that up. We talked about this before. When you're looking at a head and shoulders formation, you're looking at a major market top. So you've got the first shoulder, the head formation, the second shoulder. She comes back down. Here's your neckline. Closing below that neckline will confirm the head and shoulders pattern, as well as give you the ability to predict how low you expect this to go. You would simply take the high point down to the neckline, measure that distance out mathematically, and once you close below that, you would take that and subtract it from that point, and you get an idea of how low she's going to fall. This is a big move to the downside happening here, and if you look at this 781 low point here, you can see we've already pierced the neckline. A piercing of a trend line typically is a warning that you're about to close below that neckline. So again, all these signs tell me the same thing: get short. I have an if and then scenario here. If the following day gives me a lower low than this point here, I'd get short. The SPX S&P 500 Large Cap Index, same play here as we saw in the Dow Jones Industrial Average a couple of days ago. We had the major sell-off here, looking for a counter trend bounce. She happens, and for a day she can't hold it, she sells off. We told you that this time, if the following day give you a lower low and you didn't break out to higher highs, which you didn't, you came within pennies of it, but you didn't do it, then I'd get short and to keep a tight stop right here. And I wouldn't adjust my stop at this point, just be staying short at this point. I do see this breaking down, getting taken out. I've mentioned this before. When you have a sell-off and then you bounce, and it's just a counter trend bounce, unless you have a nice hammer candlestick formation. You don't have it here. This indicates this is not a true bottom. Same thing was indicated here. So when I say we're going to break through here, that's what I mean. Silver is basically the same overall story as gold. Everything I said about gold, just say ditto to silver. I wouldn't trade this on the long side or the short side. She's been moving sideways. She has now broken down, taking out the sideways channel that she was trading in. She was moving sideways right here. Now she's obviously broken down throughout that. So leave it alone at this point. If you get a counter trend bounce, then you can take a short opportunity in that point, because your trend is obviously down at this point. But I don't want to be shorting at this time. I want to wait for a counter trend bounce and gives me some volatility in there, something I can actually work with. Right now, this little tight trading range, stuff like that, I don't like trading that. You can't make as much money as you can with these other charts I'm showing you. The Toronto Stock Exchange, or Canada's markets, you can see that we are in a downtrend. Makes a lot of sense, being that they are typically motivated by the direction of gold and silver and these metals. So when you're seeing that you're getting a nice little downtrend here in it, Toronto Stock Exchange, that makes sense, because this is what you got in the gold and silver markets are confirming one another. This scenario here, basically same thing as the situation we talked about with this arrow should actually be blue. Basic situation we talked about with these other charts. We're seeing this counter trend move. We had this nice sell-off here. Counter trend move for only about a day or maybe two, and then she sells off again. We think that this is indicating that the sell pressure is very strong here. You should be finding a resistance here anyway, because you had a previous support here and here. When you break that support, what do you get? You find resistance. So don't expect a lot of upside in these moves to the upside. Expect them to peak shortly and roll over, and then you want to get short again. You don't want to miss this move to the downside. The VIX runs the inverse of the S&P 500. Whenever you're looking at the VIX, if you're seeing a bullish setup in the VIX, and you should be seeing a bearish setup in the S&P 500, and vice versa. And this chart right now, it is kind of sloppy. There's been a lot of volatility in it, but it is actually starting to form a very nice bullish pattern. What you have here is previous resistance at this level, and you've seen that for a while. We talked about that last week. You're basically up here, hit resistance, back to support, back and forth. Then you broke that support, which we got actually really bearish on the VIX on that situation, because you were breaking a major longer term support line and had just the wide open scenario for a major move higher in the markets. But that didn't happen. We started to see she shook it off, and we got long at this point. When we started seeing this series of higher highs trending like that, we saw that this rally to the downside was actually not getting support. We were actually seeing a reversal back to the upside with the VIX, which meant to look for the S&P to start peaking out. That's exactly what happened. So she starts moving higher here, tests the resistance, she pulls back. We continue this situation. We talked about what had really happened was we had just reestablished that support line. So whenever you have a situation like that where you come back up and you reestablish the support, something's changing. We had this continue for a while. Then she come back down here. We tried to get long, but we couldn't do it. We've got big gap at the following day, so we couldn't actually take advantage of this, and she sells back off. We just watch it for a nice hammer formation. Didn't really get one that I liked, that I wanted to trade. You could have used this one, but I didn't. She's moved up here now, and she breaks up to a new high. That means this resistance line has been pierced. What did I tell you about piercing a trend line? You pierce a trend line, it's a warning that you're going to close above that trend line in this case, or break through that trend line. So I would be looking for the VIX to shoot higher. We talked about that last week as well. And I would also expect to see the S&P 500 to move lower. I mean, that's how these things work. In this situation here, what you can see is you had this move up here, made a higher high, it's pulled back down, and now she's consolidating. That's proper. That's what you want to see. When you're starting to get higher series of highs and stuff like that, you want to see them build in a stair-stepping formation. You go up, you consolidate. You go up, you consolidate. That's what's happening right here. You went up, you're consolidating. You're just moving sideways. That's fine. You're going to start to see this guy get tighter and tighter and start to move higher. That's also what's going to happen on the S&P, only it's going to be doing it in the other direction, going lower. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. That helps us exponentially. You can share our videos online. That helps as well. Actually, that helps more. The main thing here is that I enjoy what I do. I love helping you guys as much as I can. It's all free at our website, but we really need you guys' support to help us continue to do what we do. It helps us be able to bring out more things for you guys. Okay, it's just a win-win for everybody. So thank you guys for your support. We have been growing every month since we've brought this thing back, and we thank you guys very much for that. God bless, take care, enjoy your weekend, and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.